on the stock market. That it's more with regard to the news. That's where you be able to determine the movement on the charts. Yes.
Okay. All right. So can you please help us understand what to do when the news come? Maybe the news come. I don't know fundamental, but I want to trade fundamental. What do I do? Hello, sir. Please, I'm waiting for you. The same question goes to you.
Oh, it's mostly when the, let's say, the Euro USD,
okay,
or the US government is going to, the employment news, maybe there's going to cut the jobs, maybe the dollar is gonna go up or go lower. It's more determined on the reports that are coming from the government reports and stuff every month if they give out the news.
Okay.
Then it will affect the movement of the currency. Yes.
The movement of the currency. That's very good. That is correct. All right. So anyone else who wants to say something about fundamental? Mr. Jonathan. Please unmute your mic, Mr. Jonathan. Mr. Jonathan, your hands is up. Would you please unmute?
Can you hear me?
Yes, I can hear you, sir. Good evening.
Hello?
Yeah, hello.
Okay. What I'm trying to say, yes, when you trade fundamentally, you trade news, politically, and economically.
Okay.
That's when maybe, let's say, maybe you trade something, news from Tesla, the company of Mr. The guy, and maybe you trade something in politics.
Okay.
That's my understanding about fundamental.
Fundamental. Okay, that's fine. Thank you so much.
Yes.
All right, that's also very perfect. Madam Juliet, Nigeria.
Okay, good evening, everybody.
Good evening.
Okay, from what I got from fundamental, it's is actually a trader. It's really about news, about events, and that as a trader, you really need to be aware of economic calendar, and then you should be there are certain events and certain news you should be aware of, and these news create volatility in the market, and that could change the direction of the market. That's what I got.
Very good. All right. So that is very, very correct. I think Monday I use you as a case study, so you actually captured it very well. So I will use another person as a case study today. All right. So thank you so much for that. Well, so we are going to use a chart. But before we use the chart, we are going to look at the signs for the news. Anybody who is trading today, you realize that if you are expecting a buy on gold, gold just dropped very, very sharp within an hour. The 15-minute candle is very long, very, very long, right? So you'll be wondering, I've analyzed the market to buy. Why is the market not buying? Now let's look at it. Now today is Wednesday 14th. And as at 1:30 p.m., we have manufacturing sales for Canadian dollar. We also have PPI also for US dollar, right? So what happened was that news was equal. You realize that they projected negative 0.1%, and the data release is negative 0.1%. So that particular news will not have too much effect on the movement of the market. But somebody will ask, so Why? Which one actually make the move? The one that make the move is the core PPI, which they projected 0.3%, and the data release was 0.4%. Okay. Now, as this 0.4%, it means that this data is good for US dollar. It is a positive event. It's a positive economic news. So because of this, we should expect all US dollar pairs. When US dollar is the base, we should expect a buy. When it is a quote, then we should expect a sell. So that is fundamental. I actually want to talk about it because it has a major effect on the market. All right, so who will borrow me his or her MetaTrader platform on mobile phone? Who is available? I want to use someone's MetaTrader platform. Anybody have a MetaTrader platform? I want to use your phone, please.
We have.
All right. Madam Juliet, are you willing to volunteer today?
Yes, sir.
Okay, thank you. All right, so you can share your screen. Oh, Mama na pama tu ba gumu babalo. Oh, baba. For a few, akbagaka. Yeah. All right, so open. Let's deal with USD JPY. Now let's go to the chart, not order. Just go to chart. Okay, so open chart. All right, so let's go to 1 hour time frame. H1. Okay. All right, so let's change to 15-minute time frame. All right, so now please change the click on the, let's go to settings. Click on the chart.
Okay, sorry, I can't hear you.
Just tap the chart, please.
Okay.
All right, then let's go to menu.
Menu.
Yeah, the top left. All right, go to settings, scroll down to settings. All right, scroll down. Let's go down. So we're going to change, click on colors, customize. Go back. Yeah, colors. Yeah, colors. Sorry. Yeah, so bar up, change it to green, from black to green. The deep green, second to that. Okay, bar up is red. Bar down is
that Nigeria has a major.
no, bar up is green, bar down is red. Black to red, black to green.
Background.
No, bar up.
And number three, yeah, that's what I mean again.
Wow.
It's red.
Yeah.
Okay.
No, I'm not saying foreground. Bar up, bar up.
Okay.
Yeah.
Right.
Bar up is green and bar down is red. The bar up is green. Okay, that down is red. Bull candle is green. The bear candle is red.
I forgot.
All right, so let's go to Dan. Go back. Go to the chart, please. Click on chart. All right, so now zoom in the chart a little. Okay. Zoom in small. Okay, thank you. All right, now over here, let's look for the news time is when. Okay, the news time is 1:30 p.m. Okay, so on the chart, click on the cross at the top. That button is called the crosshair. Before the F. Good, very good. So you've seen that when you clicked it, it gives you a black line, horizontal and vertical. So when you are moving it, it will be adjusting. When you are moving it, it will be adjusting. So beneath, you see that there's a black highlighted button there, which is 2022-09-14. So we're looking for today. Yeah, we're looking for today. Today is 1 o'clock, 1:30. So move it back small. Move it back small. Move it to the left hand side. No, it's too much. That's 12. As you are moving, be watching the bottom.
Okay.
So we want to see 1:30 p.m. No, you are increasing it right now. So 1:30. So that's 1:30. No. As you are moving, you'll be watching the time. Currently it's 13:00, which is 1 p.m. That's 2:30. So one step back. One step to the left. It's too much. Now, the time frame you are on is 15-minute time frame. So every candle is 15 minutes. All right, so you are currently on 1300. We are looking for 1:30. 13:30.
This is what.
So you have to just move it 2 candles, correct? No, just 2 candles. One step back. All right, that's okay. Now, this is the region where the news took effect. But somebody will be asking, why did it sold on USD JPY instead of buying? Because you are expecting a bullish move. So that's the question. So at this point, the news reacted negatively. So which also means that if you want to trade fundamentals, you should be able to know which pairs actually react to the market. Now, what you will see when we are looking on gold, it will be different from USD JPY. Now, I brought this so that we can actually bear it in mind that, yes, the news can go in favor of the currency and you expect a bullish move. But based on the country, the news, the currency is pegged with, how strong is that currency at that time? What is the economic activity in that country to the extent that, or that will make the currency be more powerful or lower than it. You must also have an idea on currency correlation. There are some currencies automatically when they are selling, they react positively to some pairs and negatively to another pairs. All right. Now let's take Euro USD and also get 1:30 and see how the news reacted on Euro USD. So now click on the first arrow down. That's you can click on the crosshair back, the plus. Okay, now let's take Euro USD. open a chart for Euro USD. All right, now when we take Euro USD, look for 1:30 p.m. 1:30 p.m. So click on the crosshair again. That's 2:15. So that's 1:30. You have gone far. Okay, that's correct. Now, in this case, we've seen an indecision. Then market push up, created another indecision. So the news finally took a layer of effect after major correction somewhere around 3 thereabouts. 3 thereabouts before the news took effect. But already, when you look at it critically, Euro comes first and USD comes second. So you don't expect the chart to go up. You expect the chart to come down. So the news creates some kind of volatility before it push up to around 4 candles later, then it push down. So we can see that yes, the news take effect, but it did not take effect massively. At this point, people will not experience that high volatility that the fundamental is actually working. All right. Now let's take GBP USD. GBP USD. Good. So let's get the time. 1:30. Very good. So at this point, we still expect the chart to come down. We still expect the chart to come down, but market actually bought instead. All right. So already the market is an uptrend, which means that Great British Pound is already stronger or powerful than USD. So the news couldn't take enough or put pressure on the market for that move. Now let's take gold USD, XAU USD. All right, now gold is not here. Click on the plus at the top. Forex. Click on the envelope. Scroll through. Right, so we have gold there. XAU USD. Click on it. Just touch it. Okay, so go back. Main chart. Okay, all right, so now let's get 1:30 p.m. 13:30. Okay, now at this same point, we expect the news to react immediately by selling. But you see that the first 15 minutes, it creates a little bit of a short. The second 15 minutes, it push up a little. The third 15 minutes, it push up. And the news finally took effect somewhere 2:15. That's when they create that volatility. That's when the news finally took effect, right? But there are some news that the candles will be very long. But I said it the last time that sometimes fundamentals does not show the direction of the market. They create volatility in the market. And when there is high volatility in the market, that is when traders make money, especially the scalpers, right? But at the end of the day, the news finally worked when the UX market finally took over and creating the reversal. We see the sharp breakdown or break below. So it only means that the crowded region here is all about consolidating. Now, when you are a trader, you already know that you don't trade market during consolidation. you trade when market is in ranging, or sorry, when market is trending. When it is ranging, you one way or the other know where it will be going. Either it goes up or it goes down. But when it is consolidating, you don't know if it is going up or it is going down. Then we also have a double top created, which is like an M, and give us a confirmation at 1703.35. So anybody that knows how to trade patterns, the person would have entered a sell trade at 1703.35 and be in a massive profit by now. All right. So that is when it comes to fundamental analysis. Those are a few things that happen. All right. So we can see that the fundamental traders did not enjoy what they expect to enjoy from the market. Now, another reason is that, okay, Madam Julia, thank you so much. I'll switch to my laptop now. Thank you so much for that work.
Thank you, sir.
Now, the reason why that confusion happened in the market is this. The major news itself is the cause of the volatility or the consolidation in the market. Then the minor or the medium impact actually go in favor of the US dollar, right? So please, if you are making a decision, don't just make a decision on one event. You also try to take other factors into consideration that is making each currency stronger than the other at one point. So we now come to this screening website, right? So at that time, you would have seen a reason why US dollar is not making the move. At that time, that 1:30 p.m., you would have seen where US dollar is with other major currency pairs. Okay, so at this point, Japanese yen is stronger than US dollar. Now, there is no way when a fundamental analysis happened, when the currency is in a good state, let's say non-farm payroll or NFP, if NFP happen, there is no way you should see other currency pairs too strong than US dollar, right? So as you have a major news, and within this period, you see that there is more or less like the US dollar is still down. It means that the news did not take effect as expected. Right? So you can be a fundamental trader and you will not really get what you expect from the event. You can be a technical trader and you'll be able to see or benefit from the news just enhancing the movement of market in your direction or your favor. Right? So just a quick recap. When the actual figure is greater than the forecast, right? So this is the forecast line. This is the actual figure. So when you are making a decision, you make decision with the forecast and the actual lane only. All right. So when the actual figure is greater than the forecast, then it's a good it's good for the currency. Hence, you expect that currency should be bullish. If it is a base currency, if it's a bear currency, if it's a put currency, then you expect it to be bearish. If the actual is less than the forecast, it's a bad news for the currency. Hence, the currency will go down or sell. If the currency is a base currency, you expect a sell market. If it's a quote currency, you expect a buy market, right? So before you place any trade, please read the news. Before you place any trade, make sure you read the news. Make sure you have an information, a breakdown of the news to understand why the result came out that way. All right, so these are fixed data or economic data that actually run through the year, right? So if you are going to be a fundamental trader, you should already know, for instance, tomorrow we have a major news, same 1:30 p.m. You should already know what the core retail sales are. You should know Empire State Manufacturing Index, retail sales, Philly Fed Manufacturing Index, unemployment claims. You should know what these news already mean. To have a fair knowledge about them. So once you already have a fair knowledge about them, at least last month, Tomorrow they are coming to, those news are taking effect at 1:30 p.m. Which means that, yeah, we have 3 major news and then 2 medium impact, or 3 high impact news, 2 medium impact, and 1 low. All right. So you have to ask yourself, well, what was the employment claim last month? What is the employment claim? What is all about? What is it all about? How could it have effect on the market? So when you're able to figure out all those stuff, you have a pre-knowledge, a pre-information about what is coming to happen. You can also project the outcome, which is the actual data, before it will be released. So you don't find wanting, you'll be on the chart and you don't really know if you are buying or you are selling, and all those stuff like that. All right. So you must read the news at the same time. Now, you must also know that the market may react opposite if different news come into the system. Right. So there can be a fixed dated news, at the same time a sentiment. So let's say economic news meets with political news, or economic news is in a section and a political news comes in again. You don't expect the market should go with the economic news. The speculation will rather come and take effect at the same time, right? So these are a few things I want to recap before we take today's topic. All right, so some people also trade the news without any technical analysis. Yes, they also make their money. So mostly, many people who trade the news, they do pending orders. Yeah, they do pending orders in a martingale style. Yeah, because at that time, the market is actually moving so very fast. When we say volatilities in the market, we are talking about within 1 minute, you can see 2 pips, 10 pips, 2 pips, 10 pips pushing down like that. Within 2 minutes, you can see market going in someone's favor like 100 pips. And that's what we call volatility in the market. All right. So those are a few things you need to put into your mind when you are with the market. All right. So as a trader, tomorrow morning, you are coming to trade ICS signals. What do you have to do? Okay, which of the signals am I trading? That's the first thing. Which pairs am I trading? Which pairs are you looking at? Are you just there coming to trade everything? No, you are a bad trader. You can't be a good trader if you are just on to trade everything. Why? You cannot monitor the economic activities of all those things. All right. So for me, I'm a gold trader. I love to trade gold. So what do? I will have a keen interest in the reaction when it comes to Australian dollar. Why? There is a correlation. Then I also look at, okay, we have US dollar here, which is also having important major news for that day, or high impact news, right? So those are the 2 things I'll focus on. So when I do my analysis, I will now do plus or minus. If I do my analysis tomorrow and I'm going to trade, I have to do plus or minus. Now, that plus or minus, what effect is it going to have? The news, in case the news didn't go in my favor, will I cope with my stop loss? In case the news goes in my favor, am I going to be greedy that I'm extending my stop loss and my TP, or I'm just taking my profit, I'm coming up? So as a trader, this evening you have to do that calculation. All right. That's why we say in trading it's a circular thing. When you see us resting, it means that maybe, I don't know, but that is how it is. You can only decide when to rest, right? So, for instance, if market ends by Friday, what do? We do back testing, go into historical data. If your wins are more, why do I win more this time? You have to still ask yourself, do I win by luck, or I win technically? So once you ask those questions yourself, you now do your reviews and corrections towards Monday again. So before the market opens, before you open your MetaTrader, you have to put things on paper. You have to put your journal, check your journal. What didn't you do right? Which strategy did you use last week? Did that strategy helps you? If that strategy helps you or it didn't help you, what do you have to change? Do you need to add something? So once you put all these things together, regardless the news, you still trade normally and make enough profit, right? So Forexfactory.com is the website you can get that from. You also get it from ICS back office. Another important website I don't joke with is the Finviz website, which actually gives me or gives relative performance of other currencies against the US dollar. And it's auto refreshing. You see, it just moves New Zealand and Euro just interchange or swap each other right now. Okay. Yeah, I remember when I started the journey those days, these are the only things I used to be playing around the market, and I still make few money in the market. Okay. All right. So that is it for fundamental. And let me just show. All right, so you have all this information at ICS back office for you as well. Economic calendar. You should be able to get all this information, and we use 3 stars. So medium, a high impact news is 3 star, medium is 2 star, a low impact is 1 star. So tomorrow being Thursday, we have the employment change for Australia that's affecting Australian dollar. We have the predicted, that's the forecast data. Last data was negative. So the probability is that is it still going to be negative or will it be lesser? You look at that information at the same time. And then we have unemployment. So it's employment against unemployment. Now, what is unemployment? The number of people who didn't get a job. So if you want to deal with these two data, you still have to do some critical and logical thinking at this particular point. And don't forget, the data is being released the same time. The data being released the same time. Okay, so you have to do some plus or minus here, definitely, even if you're a fundamental trader, right? So last month they recorded 34.4. So they are still projecting 34.4. What do you have to do? You have to go and look at what was the previous data. This is the previous data, but what did they project before this data come? Then you go back to the chart and see how did the news effect affect at that particular moment. Then you can now use your statistical analysis data, the historical data. Then you can be able to know how you are preparing for tomorrow when it comes to the fundamental. Do the same thing for core retail sales at the same time, then retail sales at the same time, and price to manufacturing index at the same time. You do it for all. So tomorrow, if you're the type who doesn't want to have anything to do with the news, then you can avoid all assets or all pairs that have Australian dollar and USD. It means that you don't have anything to do with the news. But as a trader, you must check the news. All right, very, very, very important. Okay? Now, aside that, as a trader, you must also be friend with the market news. That's more or less like the sentiment. Now, if President Joe Biden is coming to say anything right now today, you are not aware. As you are not aware, it doesn't mean that he won't speak. So as a trader, you need to have some kind of information or certain things that should give you some data before, so that nothing will pass by you without you knowing. All right. So this is also very, very important, and we need to utilize this information at the back office. Now, if you are in ICS, even if you are a trader, you understand that the right place to get some of these informations are not that easy. Yes, sometimes there's a little bit of delay when it comes to the information. There's a little bit of delay when it comes to some of the data being released. So the website you get the information from is equally very, very important, right? Okay, so that's it for fundamental and how to trade the news. Now with that topic, we are going to treat identification of high of a period and the low of a period and how to utilize it. Now, we always hear LOD, which is low of the day and high of the day. But I added period. I added period because there are points in time that you may not see any low of the day and high of the day, but market is actually reacting to high of the week or low of a certain week, or high of the month, or high of all-time high and all-time low. Are we getting the point? So that is when it comes to LOD and HOD, right? Not head of department actually, right? So let's go to the chat and watch real quick. Okay, so this is gold, my favorite. Even if it is bleeding, I'm there, right? Now, as far as technical analysis is concerned, we're expecting gold to break this structure or validate the structure and shoot down. That is as far as technical analysis. But because of fundamental analysis, yes, fundamental analysis, it reacted. That's why you saw this bearish strong candle. Now you can also see that even though the fundamental came after the data is released, after the fundamentals take over, the bullish pressure was not that strong, even though there's some kind of indecision in the market. So at that point, we could have converted this whole layer as a fake out because it was not validated. If the effect were to end on the trend line and push up, they would have said that the trend line is validated, right? So those are a few things that you need to know when you're looking at the market. And then the same news had effects on the BTC as well. Right, so BTC was actually climbing nicely and all of a sudden pushed down, right? Now, before the news, okay, before the news, it was doing ascending. Anytime a currency is doing ascending, you should also expect that bouncing is possible. So any little economic situation that comes, the bouncing will hit it as soon as possible it can, right? So as you are seeing this as a trader, you don't really push too much confidence in it that it's going to buy. Why? We have an impulsive move, a major impulsive move here, and then there was kind of short candles. Imagine every 4 hours, this small candle appeared. Every 4 hours in the session, Doji, or every 4 hours, Hammer Harami are not forming. Van Harami forms and it's not confirmed. Engulfing form is not confirmed. At that point, you have to be expecting a potential reversal. Now, we also made point notice that our expectation is to, before we can confirm the bullish move of the BTC, we're expecting it to break this level. Okay, so those who actually make the decision from here, yes, it's still going well with them, but we have a new point of concentration. Last time Monday, we actually talk of levels. So we have key levels. So even though there are fundamental pressure in, we have an interesting point to look up for, which is this layer now. This layer has become an interesting point now, which means one way or the other, the lows are being created, but whenever the bearish pressure is coming, it comes heavy. The lows are being going higher, but whenever the bearish pressure is coming, it comes with force. So how long will they happen? All these are things you have to really look at. Now, so at this point, let's look at spotting interesting stuff on the chart. Now, let's say you are working from this level and this level. You want to do analysis. All right. So as you want to do analysis and you are just looking at this space, we have to look for the low of this period, which is this level, and the high of this period. This is the high. This is the low. So now, this high and low They help you to project potential resistance levels and support levels. Helps you project potential resistance level and support levels. It also helps you project potential take profit points and stop loss points and entry points. So it also helps you know potential movement of the market towards a certain direction. Those are the things high and lows guide you with. Now, I said something when we are looking at support and resistance that we are saying that it has to have a logical sense. Support and resistance is not just a line you draw expecting market to hit it or respect it for you. It is a line you draw with a reason why that line is created or is respected. So when we are looking at this high, the high even gave us a reason to consider this whole area as a high. When we are looking at this low also gives us a reason to consider it as a low. Now, we cannot say that this is a low of the day. We can also not say this is a high of the day. Or we can say this is a high of a period. Why? We are taking data from 13th July, 13th June to maybe 19th September. We are looking at how BTC reacted there. And we are going to make a decision to be able to spot the direction of the market and its potential direction, the nature it will create, and where it will be going. You understand? So now, after you have spotted that, how do you do it? Right. So let me go to MetaTrader platform. So I played it out, saying that's what we all use for now. So BTC dropped, which means that all the cryptos I have given so far, they will also drop, right? So as they are coming to drop, you should also know your dollar cost averaging very well, so you can be able to take advantage of it. Very, very important, okay? All right, so I'm switching to MetaTrader platform. All right, so this trade I was losing the last time, I closed it in negative. I got a level, a reason to enter again. And for 24 hours now, 48 hours, it's playing in 2,000 something dollars, right? So now, let's look at this chart. A chart like odd JPY. When it is climbing, it only climb up. A chart like TBP JPY. When it is climbing, it only climb up. When it is dropping, it only drops down. Okay, so you must also know currencies. Currency pairs that when they take an uptrend, it's uptrend. When they take a downtrend, it's downtrend. You must know those currency pairs and also prepare how you do your analysis. The reason why I mentioned that is that there are sometimes your analysis will be correct, but wrong. You set the trade, it hits stop loss. You set the trade, it hits stop loss. You set the trade, it hits stop loss. The reason why that always happens is that many people are on the smaller time frames. Many people are on smaller time frames. Yes, your smaller time frames can give you the decision, but it might not be accurate enough. Okay, so those are a few stuff that you must know. Now, let's say, let me take a fresh asset. Somebody should just type any currency pair in the chat box for me. Any currency pair that comes to your mind, please type it in the chat box for me. Any currency pair that comes to your mind. At least $2,000 is okay. All right, so GBP USD. Okay, all right, so we are looking at GBP USD. How do you look at it? How do you search? Where do you get it? So we have Market Watch here where you can see symbols, right? So you can just type GBP, GGG. All right, so this is GBP USD. I'll open the chart. Now we can see this is what we call fundamental candle. This one. This is where people make millions of dollars within an hour. But it is not actually an hour because the candle only closes in an hour, right? So these ones, I don't know what name we give them though, but it's fundamental. Okay. So you can see 15-minute candle. They reacted here like this. This is it. Nicely dropped. So within 15 minutes, this candles take form. And the next 15 minutes gives you this. It give you confirm, reverse a little bit of rejection here and draw down. This is the fundamental candle. All right, so we want to look at this asset. Okay. Now, if you are looking for a high of a period, then you have to focus on daily time frame or weekly time frame. Okay. Now, if you are looking at this, so let's say we are picking it from this level, the first thing you should do, which is not compulsory, is to set your period. Now, we also have default period separators on MetaTrader platform. How do you get a period separator? Right click, go to properties, then you come to show, then you click on show period separators. Right, so that's that dotted line. So that's period. Okay, so when you take daily time frame, the period it shows you is not the same as 4-hour time frame. 4-hour time frame gives you period based on the daily time frame. 1 hour also gives you based on day. 15 minutes also gives you based on day. But if you go to a daily time frame, one candle is 1 day. So it will count some number of days for you as one candle, right? So let's assume we are just new traders trying something with 4-hour time frame, and we are looking at the GBP USD. Now, we've seen that market is actually going down, but we want to know, is it still going to go down or it will buy? Right. So what you have to do is that you have to first look at the high of the period or high of the day. So it means that the highest it has gone to, based on what we are seeing on this chart, is somewhere 27th July. Right. So what you have to do is just click on this horizontal line and put it here. That's the red line you just seen there. That gives you the high. You have just identified the high. There's no technicality there, right? Now, before July, it has a low here. Now, if I am going to make a decision, I will look at all those I'll put all those into consideration. Okay, why? Because I don't apply what I know. I apply what I see. Okay, so put it in mind. If you want to be a successful trader, you don't just apply what you know. You apply what you see. After you see, you observe and make decisions. Right? So before I will even look for the low of the lowest it has created here, I'll be looking on the left here. Before this high was created, there was a high here. Okay? Before this high was created, there was a high here. So you just put it down there. That's a high. Then before this low created, there was a low here. So we now pick this low. Okay, so you can give them different color pattern if you wouldn't remember it. All right, so let me give it light green, lime green. Okay, so there was a low there. Now this low, its purpose is coming, right? But I just want to spot it for a reason. Then you now finally get the low it created here. Now we wanted to know where market is going next, not where market is coming from. But the data have a relatively relational data to how market came down. So for you to know how market came down, you have to know where was the low, where was the high for. So this low this high and this low now give you dynamic support and resistance. Okay, that high and low gives you dynamic support and resistance. It also gives you a clue on how market reacts. Now, at this point, I can boldly spot a reasonable zone here because this was a resistance, break of structure, went to create a high, come back to validate or respect that resistance to support and push up, almost testing the high is created, now validated as a resistance, then came to break this structure, this level here. It break this level, test it, now convert it back to a resistance, and it starts selling. You can see that trading is actually very simple, especially if you can see and observe and make decisions from that observation. Now, after that, we now have our low. This is our high. But what kind of trader are you? Are you looking at holding a swing? Are you a swing trader? Let me put it that way. Are you a swing trader or you are a day trader? If you are a day trader, then you have to be looking at information on daily basis. This is when the high of the day and low of the day comes in. Now, we're also going to integrate session trading into it. Right? So now, we are now going to look at, concentrate on this level here. Let me write it for you. Objects, shapes, rectangle. So we are now coming to look at this point. This is our point of concentration now. Okay. Now that's our point of concentration. Because maybe we are just looking at how market is going to behave in the short term. Right. So if that case, this is our high, this is our low. Within it, we are now coming to spot other lows and other highs. Now you break it to what? 1 hour time frame. Now you see that I have shaded it. Okay, I have shaded it. So now it's easy for me to what? Work within that space. So now we are on 1 hour time frame. So is there any low again in it? So you look for the lows. Here we have a high here. So this high now becomes our new point of concentration. We'll use the red for it again. Somebody will ask, how do you do technical analysis? We've just started. All right, so we now have this high, this low, which was the previous high we see or previous low, now becoming a high. But because we spotted that on the 4 hour time frame, we are now looking at a 1 hour time frame. So at the 1 hour time frame, this is our high. Okay, so this is now our high. What is our low? This low is still valid, but we have a new low created here. So you now take another horizontal line and spot this low. This low now validates you to have a support. Very beautiful. Now, is there any other time frame you want to look at? Yes. You have to look at 15-minute time frame. So you can see the outlook clearly. So you come to 15-minute time frame, come to the end of the chart, everything is still in the white line or your point of focus, right? So you now have this here. It's always good to look at the end of the chart, okay? So let me just push this back. Let's do it like this. Let me change the color. So the bar up is green, bar down is red, the bull candle is green, the bear candle is red. All right, good. So we now have something very interesting. Let me change the rectangle to black just to match the chart. Okay, let me put it dark blue. All right. So we now have an interesting thing happening here. We have our high here, and we have our low here, and this is our lowest. So at this point, what is market doing? You can now look into it. So connecting this low with this low with this low with this low with this low will now give us a trend line. So I've drawn a trend line. That's how we got trend line. Now, before today, this trend line was valid. Now, the trend line, you also get the analysis based on how you draw it and the point you want to connect. So if you want to connect 1, 2, 3, this is where you draw a trend line. If you are looking to make it a steep, means that you are connecting 1, 2, and 3, and 4, right? So I would prefer to get it here. Now, after that, you now have to look into it and see which other point can you connect. So I can also connect this point here, from here down to them. Yeah, somewhere here, right? So the top two, which point can I connect to the top? So you look for it and just connect this one. All right, so we have a trend line. Market is actually going up. Why 3 lines, not 2 lines? It's 3 lines because this is going to act as the base trend line, the upper trend line acting as a resistance, and the control line is the middle line, where price or market rests at one point. Now, how do you get this? You got this because you connected the low and the high. That is number 1. Let's take it off. We now want to use another tool called equidistance channel. So the equidistance channel, you just put it on the low and then the high, and it draws the equidistance channel for you. Okay, now if you are using the equidistance channel, this one is more or less like automatic. So the outputs you get will be different from when you are just using your normal trend line, because you draw your normal trend line with your eyes. You draw a normal trend line with your eyes. But when you look at the equidistance is connecting the low you identify with the high. The low you identify with the high. So which also means that if you are using this equidistance line, you also have a reason to catch this fundamental analysis. Why? Before today, you would have actually pushed your analysis where you see this as a resistance, or highest market should go is the green line, which was a bottom or a low that was created. Now, after that, what do you expect? You should expect that market should sell. And if you're also using application of trend line, price was broken and touched. So there's a confluence there. Then candlestick formation. So you can now break it out. We have some patches here happening for the high, which is do these 2 top candles. So we do 2 top candles. It's actually created price resistance. So once you saw price resistance, the potential of looking for a sell opportunity will be high. So all those who actually understand technical analysis by observation, they are not actually going to be expecting a fundamental, or they don't even know a fundamental is coming, but they would have touched this sell. Right? Now we are looking for what will happen next. Okay. Now looking at what will happen next, market is currently here. So we now wait for how the day is ending. So if the day is ending, we have a new low creating here. So if that candlestick is validating the new low here, we'll now look at it to the left. How did market react at this point? Now, is market reacting to respect this high here, which is this high in the day? We are now going to look at this same high, but there's another high in that high, which is this level. So you now put your line here. Now, when you now put your line here, there are 2 things involved. When market is moving in this line, 1 and 2. So let me use green for this. Okay, so when the market is moving between this red line and the gray line, then we can say that market is ranging. Okay, so this is where the terms come from. So if market is going like this, same level, same level, same level, then we can say that market is ranging. But if it is going in that level, it comes down small and it comes this way, come like this. All right. I went out a little, the network switch. All right. So let me go over that last phrase again. So if the market is now performing in this level, and this level, and this level like that, then we can say that it's ranging. Okay. But if it is not creating equal highs, equal lows, then we can say it's consolidating. Now look at, now use your eye. Don't worry about the lines. It's because I'm teaching, that's why it looks plain. Now let's look at it from this point, taking all these things into consideration now. It can now help you to know the next potential points you should concentrate on. One, and then have another one here. Two. Now at this point, when you are making a decision, let me clear the chart a little. All right. Let me take this off. Okay. Now, at this point, when you are making a decision, you now have a place we call region. You now have a place we call region. Where are the regions? These are your safe regions. 1, 2, 3, 4. So if you are selling, you must set your stop loss outside the region, so that even if market come as low at this space, it won't take your stop loss and go. Even if it comes within this zone. Why? Because, why do I say that? I say that because something like this happened here. So the lowest your stop loss should be is, can market come as low as this level? That's the question you should ask yourself. Or can it come as low as this level? So as far as you are now looking at a buy opportunity in this area, don't just look at, okay, let me put my stop loss here. The probability that the market will hunt your stop loss is higher, because the main region you need to look at is now these two areas. These two areas. Now, another point is that you now have to zoom this formation here. You need to now zoom this formation here and check if market is actually done selling. Okay, you must check if market is actually done selling. That is now going to buy before you go into the buy. That is the things that you need to have in mind as a trader, regardless the asset you are looking at: crypto, stock, bond, currencies, synthetic indices, any of them. You must now know, okay, now I have spot my high of the period, my low of a period, but is market selling or buying? Is this a major, this 15-minute time frame, you can pick a trade on it. But now, how do I know that from here to here, market is done and is ready to buy? So now after you ask that question, what are the tools you can use? One of them is Fibonacci retracement, which is our next subject, right? So Fibonacci retracement just help you figure out pattern formation and continuation, to be able to identify or be able to let you know continuation or reversal. Now, when it comes to Fibonacci, it is actually a formula that gives us a ratio where you add the previous number plus the next number to give you the next number. And when you divide that number, you should get 0.61, if I'm correct, right? So now we're going to look at, I have a video that will give for you to know the theory of Fibonacci. That's if you're interested to break it down. And if you're actually looking at Fibonacci and harmonic as a strategy, they have to understand the numbers of Fibonacci very well, what comes together to form that number, how it reacts, how market works with it. So with that, we also have a pattern we call ABC pattern, right? So ABC pattern only means where did market start from? Now, your ability of spotting it right will decide if market will go in that decision or that right for you. For instance, if I'm looking at this low and this high, I want to be sure that is this a correction or a reversal, then I'll have to just take my Fibonacci 2 retracement bar, put it at this button, the bottom here, drag it to where market created the high for me at. This is the high. Okay, so this is the high. Now, we take it from here to this. So this is A, and this is B. We are looking for C. Now, if this is A and this is B, where is C? Now, the C only means that any number or where market gets to and it did not break below 61.8 on the Fibonacci, giving you on network is worrying me today. Sorry about that. All right. So when we look at this practically, market came from here and created up to this level. So we identified this place as our A. So this is A. This is B. So this now becomes a C if it gives us all the necessary validation. Now, if this A, this C start buying, this C will now become our new A for you to now project with the Fibonacci tool again. Okay, so the rule is this: 1, 2, 3, and 4. When price breaks 61.8, automatically no is coming to 100. That is it. When it is between 50 and 61.8, then you should be looking at it as, okay, it's a retracement or a correction. So you'll be expecting a potential buy where you now apply your technical tools or how to give you confluence, candlestick formation, or whatever you use to trade. Is it moving average? You put them together and be able to get the next move you're expecting market to give you. All right. So if you're able to spot your high of a period very well, you can easily put Fibonacci and then make a move so that you can be able to enjoy profit. All right. You can also use it when you're already in a trade and market did not really give you a real reason to hold a trade. You are contemplating, should I hold or should I not hold? Then you can also use the Fibonacci tool as well. Now, when market reach a Fibonacci tool, you should expect some kind of consolidation or a layer of indecision. Okay, so that is how it is, and that's how it works at the same time. Okay, so for instance, this is my demand and supply tool I always use, which validates what we actually put as a range. Okay, now if you already know how to use demand and supply, you should also look at it from this point. So telling you that even though you have applied the Fibonacci tool, in this area, you also get what? Just this is just a correction and market come to the support level. Right. So you have to see the market from two sides. Now, if you're able to spot that right, what do you do? Okay, so now this now become your A. This now become your B. You're looking for C. Go back to Fibonacci, put it here, and drag it to B. Okay, so currently, if it's a sell pressure and you are wondering if you should buy or to sell, what you have to do is that you have to be looking at, will it get to 50.0 or 61.8? Now, if you're able to do that, then you can say, well, okay, based on my technical analysis and other observation, I'm expecting it to come and hit the Fibonacci trend line and give me a shot. All right, so that is it. We'll keep practicing until we get to understand very, very, very well. I'll end it here for tonight. Next, we are going to look at patterns, reversal patterns, continuation patterns, and all those stuffs. I think we are getting close to the end of learning. And we can start trading, make a lot of money. So if there's any question, please raise up your hand and ask real quick. Thank you.